Alright, welcome to one of my videos here. So here it's Friday, 3 p.m., November 6th, 2020. And today we're going to be talking about a special coin request that we got is a CRV. Alright, and apparently it's a very great fundamental coin. And we're going to be looking at the technicals today. We're also going to be taking a look at the BTC dominance. And we're going to try to develop a good strategy to trend this this coin. All right, to trend this coin. Now, for you guys that are interested in my technical approach, I am going to be making a lot of more videos specifically on my style of trading, and it's basically trend following, utilizing Fibonacci and Elliott waves, but more so Fibonacci time and price. Okay, and this is basically this is my a new channel, so I have currently 0 subscribers. If you guys are interested in the way I do analysis on with Fibonacci and whatnot, and you want to tune into longer videos that we're going to back test and whatnot, this is going to be the channel for you. Probably going to do a lot of live streaming too and stuff like that. All right, so CRV. Let's actually go to BLX is what I was doing my statistical analysis here. Let's go to Bitcoin dominance because you know, this is going to be an important part of this video as well. Okay, so CRV is the coin that we're talking about. All right, and guys, I've done a lot of analysis on this guy here. I did an Elliott count on it, and I believe that we have the makings of a good trade right here. So let's take a look first off at the futures chart. Starting off with the total market chart right here. I've got a nice layout of this video. So as you can see, this is the 8-day chart. Indicators, all I have right now is volume loaded up, and you see that there's a lot of volume at the bottom here. There's a lot of accumulation. I would call this accumulation. Of course, we would have to get above it and probably close to start trending. But yes, this is one of those bullish candles, and we've got, take a look at the lows up here. What do we got here in this low? We got 329, the low, so 32 cents. Almost 33 cents, and this one 326. So we actually made a higher low right here. So it looks like a reversal is promising here. Here's the 8-hour chart, 8-hour chart here. And another technique that I like to use is Gan's recommended technique is just tracking and following the reactions of the coin. Okay, and I also made the Elliott count that I see, which I'm still not really 100% sure of. The futures chart is a little bit different. We'll get into the USDT pretty soon. But yes, so look at the reaction. 21 bars, 10 bars, 9 bars, 9 bars, 5 bars. So it's getting smaller here. Here was 7 bars. And so I put the reactions, the ones that what are we at right now? Okay, so we're at 5 bars, and then the price seems like it's coming down right here with one of these candles here that is not the most bullish candle with a lot of volume. So they're still selling supply here. But guys, if we can break out of this, a little bit of supply, this thing should start going. Okay, and this thing should start going. What else do I have to say? Like I mentioned, there's a double bottom in play here. So I pulled up the Fibonacci's from top to the bottom, and what do we have? We have that 3A2. This 3A2 is a mass resistance for any type of coin when it comes to Elliott waves. I believe that this is some type of A, B, and then C, right? Because there's 5 waves in this range right here. So if that's an ABC, what's this? So I'm looking for some type of, you know, thing like that. Whoopsies. And the double bottom, like this bottom and this bottom here, would bring us all the way to about 94 cents. 94 cents, okay? Yes. Now we can also play around with this thing right here and think that this is going to be the trend right here. So time parameters. That's all basically I wanted to say for this this chart here. The 21 hours is the one that I did a lot of nice research on it. Same type of technique right here. So 14 bars, 33 degrees, 8 bars. This one 6 bars, and then so here's the bullish chart, and I believe that this is an ABC to the downside, and then for a double bottom. So this thing's already up like 30% from the lows. Is that true? Yeah, it was up like almost about 30% from the lows. And I believe that we could come down a little bit and have a decent buy. Okay, so with that being said, if we actually take this trend into consideration here, we are basically looking for 4 bars right here for the 4th bar to be it. So I think that's why I have some arrows pointing on the other chart saying that, okay, this could be what we're looking at, right? So let's take a look at the minute charts, the 5-hour charts. Really important as well, and for this to be a nice little pump right here. So I believe this is probably going to be an A, the B down here, and then the C. Let me just go on this chart here and get an understanding of what's good here. So the 21-minute chart is the chart that I was taking a look at for the trending strategy, trending system. And guys, if you can see that there was this move right here that actually came back down. Let's take a look at the RSI. A lot of times we'll see the RSI doing the same type of thing right here, right? So a crossover, in the bearish territories, and we're just basically trying to see if we can buy the dip. Okay, if we can buy the dip. And now let's basically use these trend following indicators, just like this, a simple trend line, right? A simple trend line and see, okay, is this the top? Is this the top? And then of course we draw this. And as if you guys were watching my Bitcoin video, my last Bitcoin video, what happened? So we had some structure like this, right? We had some structure like this for the 1-to-1, and it was a replica. As soon as price and time surpassed this, so it was like right above here, guys, guess what happened? The thing was invalidation. So then the price started spiking on Bitcoin, which my stop loss got hit, whatever, 1%. And unfortunately, I didn't catch any of the uptrend because, well, I wasn't focused on the uptrend. It's all about the way you think about the markets, right? So I should have probably been thinking more about an uptrend, just like I am here on this type of trade. Now, this is basically something that I would take a look at. You see how the 89 is starting to catch up with the trend, right? So I think this is a decent risk to reward opportunity with a possible riding of the trend scenario. And what would that trend be? Well, I was watching this one when it was right there. Unfortunately, it broke this bull flag, whatever you want to call it, pennant, and it broke it to the upside, but it broke it so much in terms of percents right here that I was a little bit scared to get in because of the fact that I use a lot of leverage. I use high leverage, and my stop loss is about 4%. I mean, my stop loss is about 1%. So when it broke out like 5%, I was like, bro, I can't even, put a 1% stop loss on there. So, but if I did, then damn, 60%. The thing was uptrend for 60. For 65, 70%, right? So if you start to understand that, bang, right here would have been the breakout, right? So I should have definitely got into that trade, but I was watching it, and I should have honestly got in that trade. If not here, this is what I look for, some type of trades like this, right? Bang, look at that. It wouldn't have got hit, my stop loss, but at the same time, you would buy it on the breakouts, right? So it's uptrending. That's where pivotal moments in the trend are your friend. You saw that the volume was low as well, so let's go and compare what we have versus this trend here. So you see that the volume is getting a little bit higher, but if we can get this trade, let's just say that it's something like this, right? I like to buy on market. I don't like to use limits just for the fact that it could just really break down. Literally, look at the risk to reward, it's 20-to-1, and this is the type of trading that I like to do. Okay, 24-to-1 risk to reward with a 2.5% stop loss. So yeah, you have to really understand how leverage works at that point. and you have to ask yourself, okay, 20x leverage is that, because of course you don't use your whole account, but you use a percentage of your account that you're willing to lose, and use liquidation as stop loss, but try not to actually get liquidated because it costs you an extra 0.5%, right? Like I said in my other videos. So like I said, this is basically the trend that we're looking for, and if it continues, that's where I would probably take some profits, and maybe even at the 61%.8. Look at that. Isn't it like perfect? I think it's perfect, right? So at the same time, yeah, so I got some alerts right here, and I don't care like if I lose a little bit of money on this trade, because it's only 2%, and every single 2% is a 1R gain. 1R gain, a 1R multiple. So, you know, divide that stuff by 2, that's about, you know, it says right here 25 25R multiples. It's a great trade, and it's going to be like some type of double top scenario. And at that point, you're going to ask yourself, right? I'm going to go to another chart here, and it's going to blow you away, because the fact that if we do hit a 61.8 on this one here, then you can probably buy some type of like the 61.8. If you ride the same trend with the same stop loss and just wait, you're talking about 150% right there, okay? For a dollar, for a dollar. And does that make sense with the technicals? Well, let's go to the 21-hour chart, and you understand that the 1-to-1 is right here as well, getting pushed down with the trend. So you see like, plus whenever you see a trend like this, double crossover, those are usually good indications. You can see that we've never on this thing ever been above the 55, or this is the 89 for a long time. Now, if we go on the bear market cycle, you can see that it hit the 55 with precision on the 13 hours here, and just came back down. And you see that it was lots of volume, and then we're actually coming down on lower volume here. Now we're pushing upwards with higher volume, and yeah, so this is what I'm watching. I'm looking for an uptrend scenario here, but at the same time that you have to look at the reaction points right here. So we're talking about 5 bars, right? This one here, 5 bars, 6 to 5 bars right there. Okay, this one here, 6 to 5 bars. Okay, 6 to 5 bars. It's perfect, right? It's really good. So this is about 14, which is a different one, depending on what you're looking for, what you're looking at. But trending downwards in the 13, bang, 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 bang. Imagine if you shorted that. I don't really care for shorting that much, 94% by the way. Why? I like shorting because it's fast moves, but I like longing because they're bigger, they're larger percents, okay? So that's where you really have to understand a little bit of the market here. Now the question is this a normal reaction? Right now it is a normal reaction, but is this a normal reaction, correction I should say, to the downside? So the 16, right? 16, 30, like we can still be, literally, we can still be, well, no, we can't, because we're above the 13, right? So we closed above the 13, and that's what we're looking for. We're looking for a trend following system. Now this is a 13 in the big chart. Let's take a look at the 3. This is the one I was talking about when it comes to the crossovers. Whenever a double crossovers, guys, this is really usually a good point. You see that the yellow is underneath and it's supporting the other moving averages. Guys, I'm bullish on this chart. I cannot not be. Now let's take a look at the 3-day chart here, right? Right, as a trend follower, I cannot be a bearish on this chart. There's just no way. Plus the volume is starting to pull up here a little bit on, you know, for, you know, the past 3 days right here, we're talking about 173 million. Let's go to coin market cap real quick and try to understand what's the supply scenario, because I know last time I checked was 100,000, 102,000 CRV tokens, or 100 million I should say, because that's not even, doesn't even make sense here. So let's go CRV, this bad boy, let's go. And we're also going to take a look at the Bitcoin dominance right after the show to get a double whammy, a little bit confirmation, see if this is even a good trade, because we want to see Bitcoin either go down into altcoins or consolidate, and then we're going to get the ones that are moving here. So I'm looking for CRV if this is going to load up today. But yeah, you guys can also take a look at this CRV token. It's a curve, a token at 41 cents right here. And let's take a look at the market cap is only at 45 million. Sorry, I'm thinking in thousands here. So yeah, the total supply since last week or about 2 weeks ago was it only got printed about 9 million, right? So actually 6 million CRV. So the supply is slowly leaking in, and it's one of those coins where you stake them and the supply goes up, so you get paid in CRVs, or you can also get paid in Bitcoin. I presume my older brother is the pro in that type of fundamental, which is crucially important to the chart here. But what are we looking for, right? What are we looking for? Here's a 3 month chart. Total supply. The total supply to me is kind of freaking a lot, but it goes in a little bit at a time, and because of the fact that people stake them, which is the interest of hodling, and hodling actually increases demand. So imagine that this supply is just getting hodled. It's getting hodled, and they're not selling it, and the only ones that are right. So we were talking about volume, right? We're talking about volume here, and in millions, in terms of millions. So these guys are saying 21 million, and volume was here, volume was here. Let's take a look. If it's in a real good project, then yes, of course, it's going to get accumulated for a few, a month or a couple months, anyways, to really catch this trend here. So 3 hours now. To trade this professionally, obviously you're going to want to get a respectful stop loss. So that's the thing that I'm kind of trying to figure out here. What's the best way to do it when it comes to stop losses? This thing's going to go up, and pyramid and all that good stuff, right? Because I don't want to use just spot, because I don't necessarily have because I want to use a percentage of my account and leverage it up, and have the rest of my account ready for another trade, right? Something like that. That's pretty good. So yeah. Oh yeah, I wanted to point out on the 55-minute chart here that we are going to be in a downtrend for 19 bars, which is 16 hours, about 1 day right here. Okay, so let's actually put that right on the thing, because of the fact that, like, on my other channel right here, let's see if the video posted, we're going to be looking for statistical advantages over the markets. Okay, so there's my first video right here, Bitcoin TA. Check it out if you haven't. Subscribe to the channel, because like I said, I'm going to be looking for a lot of what's it called, good stuff right here. So this is the reaction I'm looking for here. The 55 is also going to catch up with the trend, and whenever we see that our pullback is there, we have a multiple what's it called, for Elliott wave principles, excuse me, 61.8 sitting at right here. If you actually want to bring it back down here, we got the 382 right around there. So that's a nice little Fibonacci. There's one last thing I want to show you for this video. Am I missing anything else? This is the bullish cycle, so I'm gonna guess it's gonna go and trend on these moving averages, right? It's gonna trend on these moving averages. Now, this is the lowest time frame that I would ever use on this cycle, but yeah. So those moving averages, I'm sure it's a better trend on it. Just like this, look, you go on the order book and you see, okay, are they buying on these moving averages? If the answer is yes, then you get ready to buy it. Of course, you buy it on market with a stop loss is very, very tight, very, very, very small loss, and then you wait for this type of movement, right? And you don't sell it until it breaks the trend. It breaks the trend, and that's where you kind of have to have a little bit of statistical advantage here. To see, okay, what is the trend? What does it look like when it breaks, right? So up here, it'd be like, wow, because of the fact that you had no support here, at least, because the 89 was all the way down here, and then you could have played this bounce here too, but I wouldn't be a big fan of that at all. You could even short it if you have that much confidence that it was going to go down in the trend, confidence in the trend, right? So if your statistics are that good, like, look at that, that was the top that it didn't break, and also if you go on a lower time frame here, like the 5 hour chart, you understand that if you take off everything and just take a look at the price here, just the price. So I have to take off the indicators real quick. Bang, bang. I developed those indicators myself. Shout out to myself. Okay, take a look at this. Boom. Wave after wave. Actually, the 21 is better for that. But anyways, boom, boom, boom. And it doesn't break, right? It doesn't break the previous highs. I'm pretty sure this one didn't even break, right? Yeah, it just missed it by a few cents, but it never broke it. Okay, that's what I'm trying to say. So it comes back down, does the same thing. It doesn't break that high, that crucial price that it needs to break. So whenever that you see, this one's a big percentage mover. So you see, like right here, it broke. Right here, what would be your stop loss? Let's just say that it broke like right here. It'd be the top, of course. That's about 4 or 5%. Now it doesn't necessarily align with my thinking, but I'm gonna have to change my thinking. Okay, because I can't use a 1% stop loss on this beast. But this is a 5-hour chart, so you can, if you go like this, bang, you go to the 5-minute chart and you kind of get an understanding of what's good here. But take a look at this small movement here. We're talking about 5%, right? On 5% in 50 minutes. So if you want to freaking do good on this one, then you're going to have to, I mean, take a look. That's 1 point something percent, right? That's about 30x leverage liquidation. Not 100% sure. I think it's a little bit more like 40 or 50x leverage liquidation with a 0.5% liquidation fee. Look at this uptrend, uptrend, uptrend. But this is the 5-minute chart, and we have a very, here, let me raise this. Because if we just go to A, B, C, and then continuation to the upside, then hey, man, it's not even gonna pull back, So that's what it did last time, and I mean, it did pull back once, right? But is this the pullback that we're looking for? We're looking for another pullback here. Let's take a look at the RSI. The RSI is good for doing back testing as well, because we know that it's pretty good, for following the trend. You see the MACD as well, because they're two different indicators. One's momentum, one is I forgot what they call it, but RSI is not the MACD is momentum. So what I want to show you next time is the Elliott wave pattern right here that I'm following on Binance. And this is not the Binance futures. This is just normal price of the Binance. Okay, so let's start with the 21. One of my favorite charts right here. Okay, one of my favorite charts right here. So the same deal right here, where you put my indicators and you just see, okay, well, look, we got a crossover here, just like last time, right? We got a crossover right here, but we have a double crossover coming, guys. Is it going to make it? Because we have a higher low. We have a higher low. Let me repeat it. We have a higher low. Here we never got a higher low. Actually, we did get a higher low. We got resistance on the 5 moving average coming down, but look, we actually have support now. It's all the way at 38 cents right there. That support. And of course, if it breaks down that, then get out, get out, of course, or don't take your trade, whatever it is. But if you find support, which I really think that you're going to find support, your price next call, whatever, is going to be like at, up there, whatever it is, as a change of the trend. So take a look at this, not this one, sorry, bull cycle, but we're going to talk about this more in my other channel. Okay, so this is going to be basically for my other channel. And yeah, like I said, I usually don't share this as a really good technique in my opinion, but I believe that it's important to share with the community and share love, show love and appreciation and whatnot to other like-minded individuals, because love is important. It should be your main motive to do anything is literally to show love. Okay, so something that I want to show you right here. I thought I drew it. Maybe it was the 5-hour. Yeah, this trend line is. Let's start here. And yes, I did the Elliott count. This trend line right here. Look at it, beautiful, right? Yes. You go like this, like that, and then extend it. Okay, and it was such a good trend line that when it broke out, it never really came back down, right? Like this one was your wick, and then it's just beautiful breakout, I must say. And as the volume started to increase, right? And then from that breakout, I believe it was like what, 70, 90%. 90% from that. So that's one indicator. You know, trend lines are really freaking good. Now, let's go to the, let's start here. Let's start here, okay? And we're talking about this Elliott wave pattern, right? So what I count right here is 5 waves, right? So 5 waves down, and let's just go ahead and go through it together. And then this was the 3 wave, and then another 5 wave down. Okay, this is what I see. I see the 5 waves. So 5, 3, 5. That's a zigzag ABC pattern. And then what are you getting here? You're getting a 5. I believe this was a 5 or 3, whatever. 5, 3, and then 5. Another pullback. So A, and then another same type of deal here. Something else that we can add here is just reactions, just like this, and see if it actually worked. And usually it works a lot of times with the time and price. And yeah, just like that, guys, just like that. And we have to decide what is this wave right here. So I drew it on the 21, but you decide what you think. So I have an A, a B, and a C, I believe, coming downwards here. Here's a 1, 2, 3. The 3 was small, right? And the 5, because it was only a 1 to 1. If you actually measure it up here, where was it? Where was the wave? 1, 2, 3, 4, 5, and that's an ugly wave. That's the only ugly wave that I'm not really proud of or sure of here. It actually hit this 61.8. The blue one's the 61.8. And this is on log scale, fibs based on log scale. Okay, so 1, 2, 3, 4, 5. You got an extended 5th wave right here. So for your C wave, right, we're talking about this being a C wave to the downside. You got 1, you got 2 right here. Really weird pattern. Be honest with you, this could be another B wave, or it could be like a weird 2 looking at like A, B, C, and then this being like a 1, 2, or this being a B, C, and then being a 1, 2, 3, 4. So this is 1, right? 2, 1, 2, 3, which I didn't label because I wasn't really confident in it. 4, 5. So this would be your 3. So 1, 2, 3. Came back up with a weird 4 looking 4. Probably, I don't know if it's really the count, to be honest with you, but for the next wave. Same thing with Elliott waves, man. Like, you have to have a multitude of counselors, right? So, like, that's why I started another channel. That's going to help us with Elliott wave interpretations. If not, it's going to be better. Because if you're just doing this, in my opinion, you're at a disadvantage because of the fact that you're just guessing the waves. But when you're utilizing and you're using a multitude of counselors, you're going to be, that's why I use the RSI, the MACD, to help us identify the trend. So I believe my system that I'm in the making right now is so damn perfect. It's like literally I'm getting the wisdom from above. I believe that I'm getting like some straight knowledge. You should watch out the other video. Watch the other video because it's good. It's actually good stuff, and I can actually use it to do trading. So look, A, B, C, D, E. As soon as we counted 5 waves, some lower volume at the bottom here with some decent divergences. They're all good flags. At the bottom of a trend that's just complete drag. Of course, with this trend line breakout. You can't go wrong. You should take that trade every single time, right? So let's take a look at the 21 hours. This is what I have drawn. I know it's kind of ugly, but this being an A, this being a B, this being the C wave. Or yeah, because it's the longer, so A, B, C. Yeah, that makes sense. Of the A. And then the B was so weird, right? So truncated. Like, I don't even know if I can count that as a B wave. Maybe if we start from here. Didn't even hit the 382, but whatever. Now let's talk about the reactions. So it came up like this, right? Came up like this, the flags, and then failed. Now these are really good short entries with trading with the trend. 50% this thing never pulled back on the 21 hours. Every single one is basically a day. So in 10 days, the thing fell 50%, never really looking back. Every candle was like, put a stop loss here, and then whenever it breaks, you put your stop loss right here, right? Whenever it goes up, you can put your stop loss right here, which is tight. This one was nice, and then came up, breaks, put your stop loss back here. Came up, breaks. You can put your stop loss here. That's the tight one. Same thing, right? So right here, let's check if you would have got stopped out right at the top. So right here, if you did put your stop loss here, you would have got stopped out. Yeah, you would have got stopped out basically right at the top. And is that the best idea to put your stop loss right here? Honestly, I don't know if I would have done that, right? You got to think about this stuff, because what you're doing is you're looking for a reaction, or you can always take your profits up here, right? And then re-enter, because you're looking for a reaction just like this. So yeah, you're looking for, and then you see that the time and price, the price didn't actually hit your go all the way up here. It actually came down here, which actually indicated that you were more bearish, in my opinion, because we had more supply hitting the market for some reason, coming from wherever, hitting the USDT market. Here is the trend line time. So the time hit, and then the next thing is coming downwards. And then here we're checking for bullish divergences in the trend. We have a lower low with a higher high on the MACD. Boom, boom, right? And then you're looking for the same thing. See that the reaction was right here. Okay, you take this reaction, the previous reaction, whatever, in the trend, and you see, okay, well, this isn't, it's changing. Basically, not really changing, but that's a really good tip right there for the reactions. Like, you can make a lot of money doing just trading the reactions alone, in my opinion, because you're going to get the bottoms, or you're going to get the continuation of the trend. It's for continuations of the trends is the reactions are for. And then of course you count these 5 waves right here that I've counted for the C wave. So this would be the 1, 2, the 1, 2, 3, like I said, 4, 5. I hope that makes sense. I hope that makes sense with the 21 days right here. We have a huge bullish divergence once again, and we're looking to break that 71 on the RSI. Now, right now, we're actually right here at the price, and I'm looking for the reaction, right, on a lower time frame right here. So if we break here at the 450, we can see a nice little breakout continuation, like we broke right here, right? But it did pull back after we broke, so maybe that's what we're going to get our continuation. Might as well do a free hand right here. So I count this as being either a 1. I hope it's a 1. This being a 2, because and then we count 1, 1, 2, 3, 4, 5. That's what I count. I count because if you go on a lower time frame, you can see the waves a little bit more clear, in my opinion. You go 1, 2, 3, 4, 5, and then that's your 1, 2, 3, right? 2, 3, 3, 4, and then 5. But the thing with the 5, this would be the 5 right here. This would be either the A, the B, and the C, okay? Or this is, let's go even lower, right? Let's go even lower. Let's go 5. 5-minute chart that we can see these little, right? Because it's this here. You see that we didn't break the low, right? We didn't break the low. So use that magnet tool, and you can see that we didn't break the low. So you have to ask yourself, is this a 1? Okay, really ask yourself, is this a 1? We actually might have to go on to the 1-minute chart and see, try to count these waves, because guys, if you're trying to make that much, yeah, and of course use the Fibonacci, use the right Fibonacci's or the support resistances. That's important. And also you looking for pivotal points. I've been on this computer there in the markets. Okay, where is it? For a while today, trying to figure out this right here. Okay, so 1, 2, 3, 4, 5. Can we count this as a 5? Yeah, I think so. Probably. Or I mean a 1, 2, right? It could be an A, but I don't know. 1, 2, 3. 1, 2, 1, 2. 3, count these waves, 1, 2, 3, 4, 5, okay, 1, 2, 3, 4, 5, this is a 4, probably one more wave upwards, and you can see that this is the low. I would say that there's going to be a stop loss where, of course, just use a trend line. A simple system, right? The trend line is key for the trend. Something like that. For it shouldn't break that. It shouldn't break that if it's gonna go up for another wave here. Now with time and price, you can see that the volume is starting to push in here a little bit. Let's go ahead and count this wave and try to understand that there's 5 waves here, almost 5 waves. You just have to break the top here a little bit, and we understand that this is going to be 1, 2, and then upwards like that. Okay. Now that's why it's very important. Like we're talking about this thing right here, it moves 3 points like that, and this is like 1% right here. Okay, so that's how I use the this points right here, like -5 there. Yeah, so like 1, 2, 3. I've been trying to master that because if you can get something, watch, it's going to look like this, the pattern for longs or shorts or whatever. Tell me how you can get risk to reward ratios that look something like this, right? Maybe like this, because Gann uses a 3-point rule, and guys, trust me, I've tried this hard for the past couple of days here, trying to trade this guy here with a 3-point stop loss, and I can rest assured it can't be done. It can be. It can be, okay? And the whole point with this one is that you have to move up your stop loss. But the thing that's been really killing me right now is the fees. The fees is literally just taking all my cash. Because even if I do have a break-even stop loss, it costs me like $5 in the trade because I'm so leveraged. So I use, like, let's say $25 in the trend, and I use 50x leverage, which gives me about a 1 point something percent stop loss, and then I can actually take my stop loss and not get liquidated to get account for that 0.5% fee. And my risk to reward ratios look something like this. So 1% stop loss, and it's all about your thinking, your plan. You have to plan ahead when it comes to trading the markets, and you have to have a good plan. And I don't know if this is very profitable to be doing this, because you can take a lot of these trades right here if you could try to catch the bottoms like right here. Right, you see that was a breakout right around here, but your stop loss is not even big enough to go down like that. So that's messed up. But at the same time, you would move your take profit to at least the top like that. Now let's try this one here, because if we use a simple Fibonacci thing like this, you look for that to 61.8. Of course, the 61.8 right here is really good, and you also use the time and price principle like we're talking about here, which looks something like this. Yikes! This one here, I'd probably use. You better do too much than not enough, and it looks something like this, right? For the time and the price. Now, what if you use the small one? Right, you can also just use both, but you don't want to be too cluttered in your mind. You have to know your plan and plan in advance, okay, for your time. So it wouldn't have exactly hit it, but yeah, this is kind of what we're looking for. The time would have been right here. So if you actually entered that trade, it would have been like that, and it would have been profitable. Now what do? You take your extension, and this is literally Elliott wave theory. It happens again and again and again in the market. You would be aiming for a 61.8, which is the blue one, and raising your stop loss. And the best thing for this trade right here, I mean, the thing that I can't stress enough is when it is going upwards, you move your stop loss to break even as soon as possible, right? And then you'd be looking for at least a 1-to-1, like 1-to-1s are right here, and you'd be moving your stop loss right away to that 1-to-1. So it hits that 1-to-1, comes down, pulls back. You can either buy it there, and then that gives you another, or you can add to your position. For where's your stop loss though, right? The risk to reward is what we talk about all the time. So that would have been the top right there. Maybe some people would have been buying right there. if you add this trend line, but we have to have this theory before we go into the market, of course, the plan, right? So look for Van Cave Tharp. He says, you know, he's a trader's coach. He says that you have to have at least 50 back tests, 50 back tests, either live or not live, before you trade anything. You know, and not guess, because then you're just guessing, or you're not guessing, I should say, if you have those back tests. So yeah, for some reason I feel like we could have got that one right here. Let's just say that we longed it like right here, put a stop right here. That's a 1%, guys. Like, that's kind of a lot, which tells me that, okay, I'm probably not going to be able to use that 3-point technique, and if I do use a 3-point technique, which is good to think about it like that, but use like a 1 point. So like that would 10 is like 1 point, right? Something like that. Because right now what I'm using is like 3, as in 10, like that. That's what I'm using, like 3 or 3 to 5. And I think that could work, but it just hasn't been working because of the fact that if you lose a trade, you kind of me personally, like, I'm just like, I want to actually make the cash back, you know. So then revenge trading comes, you know, so it's not cool, especially if you're in a market that's chopping around. Like, we're waiting for this thing to break out, you know what I'm saying? So that's the whole point of it. That's the whole point of this strategy is look for the breakouts, not the breakouts, sorry, the trends, not the breakouts, like right here. This could be wave 5 right up here. You know why? Because Robert Prescher says that wave 5s, or it could be wave 3s. I have to double check. What he calls like a breakout, like just like that. I forgot what he calls it. But that's a good signal that that's the wave 3, or is it a wave 5? I think it's wave 5. Pretty sure it's wave 5, but there's still a lot of volume. Another way to look for the wave 3s versus wave 5s is look at the volume. The wave 5s is going to have a lot less volume than the wave 3. So you know, this is the 1 minute chart, so it's kind of hard to look at it. But we're looking for like this right here. So this could be 1, 2. Just look at the waves of volume, right? Actually, I have it right here, but it's hard to see on that one. 1, 2. This could be 3. Yeah, 3. And then this would be your 4, and then 5 with lower volume. But if this is just the wave 1 of 1 at the bottom of a trend here, then yeah, okay, wait for a bigger, more volume, and that's another way to identify the trend. Let's go to the daily chart here and understand that this is a really good strategy that Gann uses. He counts 3 and looks for 3 bars in the sequence. So if you can count 3 like this, it means a trend change. But this one here was an ABC, right? We know that. Did it hit a 1-to-1 or 1-6-1-8? It hit a 1-3-8-2, a 1-2, whatever, 7-2. So it wasn't exactly a 1-2-3, but yeah, 3 candles in sequence equals a trend change. Right here we just got 3, and the way I would trade this is go like this. So you count 3 candles in the back right here, and then you buy the breakout. If you did that, your strategy would have been successful, and you would have caught a 14% with you know, possible stop. I don't think it did a stop loss. Look, we're actually spiking now, right? A little bit of a spike right there. Nice, nice, with volume and whatever it is. So this is probably going to be an A, B, C, and then coming upwards for that 1 wave right here, coming down for the 2. So yeah, I can do this, like, I can do this all day. Here's the 5-day chart. The 5-day chart's a little bit more bearish because, here, let's add the indicators and you'll see why. Bear cycle. No, it's called the bull cycle. The bull cycle, because you want to see the 5 supporting. Now, within 5 days, right? So 4 days and 3 hours, this thing flips. And that if we are, here, let me add an alert, above this at 380, let's put 381 here, 382. So we're above this candle right here, which is at, the high is at 75. and we're expecting a trend, an uptrend, a big uptrend, right, for the 5-day chart. So yeah, that's when we're talking about like some decent gains where you want to be sitting and waiting for your thing to show you some decent cash. We're talking about 1,500% if it can get to $9 again, and this is yeah, this is the tether. So that's all I wanted to show you for this video. I hope you like this video. We can see that, you know, this 5 hours basically trending right here, which is bullish. And this is the bull market cycle. Bull market cycle. The white moving average is the 21. Supply got accumulated, dried up, whatever. And yeah, we're basically, this is what we're looking for. We're looking for the trend and how we can get in the trend, okay? And trade it until the end. One last thing I'll say for this video is just like the candles that make higher highs like that. That's what I look for, because that's where I like to pyramid. I like the theory of pyramiding, really excites me because you can make a lot of money. I've done it before where, yeah, you can make a lot of money pyramiding. But having an actual consistent strategy is, you don't want to be pyramiding near the tops, but you want to have a consistent strategy that actually is mathematically proven, statistically proven to show you a good result if you pyramid. And at the same time, the thing with the rule of the pyramiding is that you have to raise your stop loss as soon as you pyramid, as soon as you buy again. And you should always pyramid less than what you have at the bottom. So that's why the pyramid of the eye, whatever, is like that. Is literally your pyramid, where you're at the bottom, you're buying like in bulk, whatever, and then at the end you're buying less. So that, and at the eye, to me, this is what it means. It means like you're watchful at the top. That's why I have it right here in my background right there to always remind me, you know, to stay watchful at the top of the pyramid. Okay, so guys, I hope you like this video. You know, I hope it's not too long. I will be making more videos for my new trend traders. Here's you know, once again, my channel with my new video. We're going to be looking for this type of action once again. So peace.